In this video, I'll go through Work Together Problem 8-3, and this is from your Century 21 Accounting Advanced Textbook Edition 11 by Gilbertson and Lehman, and this problem can be found on page 255 and the screenshot of it here. Okay, so this is on journalizing and adjusting, or journalizing, adjusting, and reversing entries for accrued expenses. So we do have a general journal and a cash payments journal, and the first one says use the following information to journalize the adjusting entries for interest, payroll, payroll taxes, and warranties on December 31st of the current year. So lots of stuff going on in this particular lesson. So the first one, we have a note outstanding on December 31st. It's a 90-day 10% note. $30,000 dated November the 16th. So the first thing we want to do is find out how many days were there between November the 16th and December the 31st. So I'm going to do, my favorite thing is just to type in the date, and the ending date is 12/31, the beginning date was 11/16, and then I'm just going to subtract 12/31 minus 11/16, 45 days. Okay, so now I'm going to figure out what our entry needs to be for the amount of interest expense to accrue. The amount is going to be the principal, which says it was $30,000, times the interest rate, which says it's 10%. And now we're going to do times the number of days, which we just figured out was 45 out of, and I put this in parentheses just for order of operations and spreadsheets, 365 days in a year. And then let's see, $369.86 is what we need to accrue, because that portion of the note should be charged to this calendar year for our financial statements. Okay, so then we're going to go ahead and put that as a credit amount as well. So the accrual, we'll put interest expense as our debit, we need that there, and then interest payable will be our credit because we do need to pay that at some point, but it's not due yet. So it is a liability on our books. That is on December 31st. All right, so then let's go to part B. Payroll information for December 28th through December 31st is as follows. Here's what we have for payroll and employee payroll taxes. And here's what we have for employer payroll taxes. Okay. So this is December the 31st. And this is just 3 days of payroll. Cool. So we know that we need to have salary expense as our debit. And what do we have that's payable here? We have, well, eventually we'll have salaries payable, but we'll have to figure out how much that portion is. But we have federal income tax, or what we should probably call employee, because this is the employee side, right? So this is going to be employee income tax payable. And we have Social Security tax, which we've got to pay to them at some point. So Social Security tax payable. And we have Medicare tax. So Medicare tax payable. So we know our salary expense amount. That's $3,200 straight out of the prompt here. We know our employee income tax payable is $180. And we know our Social Security is $198.40, and we know that our Medicare is $46.40. So our debits must always equal our credits, so we will figure out what our salaries payable is by subtracting the $3,200 minus the sum of these. We'll see if I want this to go away. Sum of these. There we go. So $2775.20 is your salaries payable amount. And now we've got to do the other side, the payroll tax expense for the employer, right? So we're still on December 31st. You really just need to put a 31 after the first one. And this is payroll taxes expense. And we know we have Social Security tax, we have Medicare tax, we have federal unemployment tax, and state unemployment tax, all payables, all right? So we'll go ahead and write those in. Social Security tax payable. And we'll have Medicare tax payable. And of course, these are all liabilities. They have the word payable in them, which means they're a credit balance. We're increasing these by crediting them. And state. Okay. And these amounts were given to us as $198.40, $46.40, $480, and $32.40. Notice the Medicare tax, same on both the employee and the employer, right? Social Security, same thing. Okay. And now what is our payroll tax expense? Well, we've just got to add all these together. $282 is what we're going to go ahead and expense for the portion of this payroll period that is in this calendar year. All right, so that's that entry, and we've got one more to go. And this one is on warranties. Estimated warranty cost per item sold, $8. So $8 an item times units sold of 18,900. So we've got to do a warranty expense accrual because we think we probably will have some expense associated with what we sold in this period. So accrued warranty liability will be our credit. And the amount on this is equals $8 times 18,900 units, $151,200 that we believe we'll have to pay at some point, right? And your teacher probably forgot to write the title, so I inserted a row of adjusting entries. I'm pretty bad at remembering to do that, to be honest. So we'll put that there. And that is part 1, okay? Number 2, journalize the appropriate reversing entries on January 1st of the next year. Okay? So this is part 2 down here in your general journal. All right, so we've got to do some reversing. Everything we just did up here to accrue these expenses, we're now going to reverse because we're not ready to pay them yet. But we needed our books to show that those expenses were a part of that period, even though we hadn't paid them yet, okay? So now on January the 1st of the following year, we're going to reverse interest payable and interest expense. So we'll have a zero effect. The interest payable goes away. When we pay it later, we'll pay the full amount, not just the accrued portion. And this was $369.86. And once again, I should have wrote reversing entries up above. Okay, so we'll reverse that. And then our next one, we had that salaries expense. So we'll have to do all of our debits first, which were credits in the original adjusting entry. So we have salaries payable, we have employee income, and you know, if you wanted to, you could just do this, you could copy them, and you could bring them down and paste them, and then just unindent, right? Because they were credits the first time, this time they're debits. And now your credit was what we originally debited, salaries expense. And away it goes. and the amounts right here. And we'll just put those right down here in the debit column. And the 3,200. Oh, what happened there? I had a formula. Whoops. We'll try this again. Copy it and paste it as values. There we go. And the sum of these better be 3,200, but we'll just check. Yep. And then January 1st, another one with lots of entries to do our payroll taxes expense. All of these, right? So we'll copy these names. We'll paste them down here, but they were credits before, so they were indented. We'll just put them in as debits now. And for the credit will be payroll taxes expense. The amounts right here, we'll just copy them and paste them, and then just make sure it's correct. We'll add them together. $282 is what we originally had, so that's good. And do we need to reverse the warranty? No, we do not. Okay, that one stays. So we have part 2, journalize the appropriate reversing entries. So we did the ones that we needed to. All 3 of these did need to be reversed. The warranty did not. Okay, so now part 3, journalize the following transactions. On February the 2nd, we paid cash to electronic service and repair for warranty work performed for the company during January, $325. Okay, so we're down here, and it is February the 2nd, and we had an accrued warranty liability that we created, right? Because we knew that we were going to have to spend some money on things that needed to be fixed, that were under warranty. So now we're just going to take some of that accrued warranty liability that we had as a credit before, and we're going to use part of it, and we're going to debit for $325. And then our cash that we paid it is $325. Fairly simple. Check number 667. All right, next one. Paid cash on the maturity value of the November 16th note. Check number 675. First, we've got to figure out what the ending date actually was. So let's just go the original date that we took out the loan plus 90, and we got 2/14 of 23. So this will be on February the 14th, and we need to pay off our notes payable, and we're going to have some interest expense, right? And this was check number 675. So our notes payable was for $30,000. Yep. And the interest expense on that would be $30,000 times the 10% times the number of days, which was 90 out of 365, would give us the total interest, $739. And we'll just go over here and add those together. Because we reversed out that interest expense, now we are going to go ahead and pay the full amount, right? And that is it for Work Together 8-3. It was lengthy. We just barely made it under our 15-minute time limit. But now you get to go and do the on your own.